Before the handcuffs, Bernie Madoff was a Wall Street deity. He was a former chairman of the NASDAQ, a financial titan. He built an aura of pure exclusivity. Getting him to manage your money required a rare invitation, treating his fund exactly like New York's most restricted VIP club. Billionaires practically begged for access. But they were buying into a ghost. There were no trades, no market positions. The entire empire was a $64 billion fabrication. How does one man fake the largest financial fortune in human history right under the noses of the global elite? You build a fortress of credibility. This is the Lipstick Building in Midtown Manhattan, the physical headquarters of his operation. Up in the penthouse, Madoff ran a completely legitimate, highly respected brokerage firm. Glowing screens, shouting traders, constant motion. It projected absolute stability. That expensive trading floor was a decoy. The real money machine sat buried floors beneath the penthouse, heavily guarded and strictly off-limits to his own legitimate staff. Madoff relied on architectural deception. He used the blinding public success of the upper floors to completely mask the darkness operating below. Here is the brutal math of a Ponzi scheme. You take a client's cash and you put absolutely $0 into the stock market. This chart shows the actual flow of capital. You find new investors, take their deposits, and funnel that cash straight into the pockets of your original clients. You tell them it's profit. This creates a mathematical certainty of ruin. To keep paying out, you need a constantly multiplying army of fresh recruits to carry the weight of the old promises. A Ponzi scheme is an active detonation sequence. It is a ticking time bomb mathematically destined for total structural collapse. Which brings us down to the 17th floor. This was the restricted zone, isolated from the modern penthouse above. While the rest of Wall Street built high-frequency trading algorithms, Madoff's $64 billion ghost ship ran on this, a chunky, outdated 1980s IBM computer. A tight-knit, unqualified crew sat at these desks. Their only job was manually typing up fake trade histories and printing fabricated paper statements for the world's richest families. The most devastating financial crime of our lifetime operated without supercomputers. It survived as a manual, analog fiction maintained with ink and paper in a purely digital world. Then came the fall of 2008. The global markets cratered and widespread panic set in. Terrified clients needed cash to cover their external losses. They rushed to Madoff, their reliable safety net, and simultaneously demanded $7 billion in withdrawals. Because the money had never been invested, the cash was already gone. Madoff had absolutely nothing left to give them. When extreme financial pressure squeezed the illusion, the foundation cracked. $64 billion vaporized overnight, leaving nothing but dust. The fallout swept past the billionaires and struck the vulnerable. It annihilated the life savings of everyday retirees, global charities, and Madoff's closest friends. The agency built to police Wall Street and catch exactly this kind of predator is the Securities and Exchange Commission. Independent investigators handed the SEC mathematical proof that Madoff's returns were impossible. They submitted this evidence multiple times over an entire decade. The SEC took absolutely no action. Madoff wore a suit of armor made of elite prestige. When the watchdogs are blinded by reputation, the system completely fails the everyday people it was built to protect.